live. So I wanted to thank everyone for joining us here today and to let people know that we are both recording the event and we are live streaming it on YouTube. Ask that any participants that have come in, please stay off video and stay on mute so that we can focus all of our attention on our guests here today. Also wanted to thank the whole team at Equal Space, Medina, as well as Kelly Outing. They've been fantastic setting this up. And of course, my team back beside over at Grit Daily News, Jordan French and Julia and the whole team there trying to get this. Let's turn things over. I'm going to make some introductions here. So welcome everybody. We're going to have a VC chat and have a little conversation about fundraising in a pandemic, the ins and outs of pitching, in a virtual world. So today's guests, we've got Gina Tedesco and Mario Casabona. Both of them are part of the Jumpstart New Jersey Angel Network. Gina is part of Golden Seeds, and Mario is the founding and managing director of Casabona Ventures, and he's the founder of Tech Launch, an event that I've participated in a couple of times, and it's amazing the quality of pitches that are being presented through there. So I'm going to allow each of them to introduce themselves in a little more depth, and then we'll get into our questions.
Who do you want to go first?
Ladies first. Gina, go ahead.
Hi, I'm Gina Tedesco. I'm the managing member of Amala Ventures. I'm an angel investor. Before that, I was an entrepreneur. I worked overseas as well, and I founded a biotech company, which I exited back in 2005. I built the biotech business and then decided to become a professional investor about 10 years ago, which coincidentally is right after that downturn, the 2008-2009 recession.
All right, so good. Sorry, your video just froze there. Okay.
I believe in gender diversity, geography diversity, all kinds of diversity, because it's not only the right thing to do, it's the smart thing to do. Studies show that diversity will have better returns for investors. I look at for innovative technology in the US and also in Brazil.
And also that's one of the things, I know you're multilingual, having lived in so many places. So you got some tremendous perspective there on what other cultures can bring as far as new ideas and new ways of doing things.
Correct.
Mario, let's hear a little bit more about your background.
Hello, and thank you, Loralyn. Great. Kelly, thank you for helping putting this together. So Mario Casabona basically started my career as an engineer and built my business in the defense electronics industry, then sold it to Honeywell in 2004. So I consider myself a serial entrepreneur as well as an angel investor. I'm the founder and managing director of Casabona Ventures. It was established back in 2007 as a seed stage investment firm. We've invested in about 30 tech startups and venture funds. And typically our check size is about $25,000 to $100,000 with some dry powder to follow. I usually invest with Jumpstart New Jersey Angel Network. I find it to have a fantastic network of other angel investors. And then back in 2012, I also found Tech Launch as the first tech accelerator. And then in 2017, I pivoted that to a virtual business accelerator. And to date, we've mentored over about 150 entrepreneurs, as well as helped over 75 startups. And part of this virtual business accelerator is the bullpen event, which is the culmination of the mentoring. And so far we've done 16 of them. And Loralyn mentioned that she participated, or she was in one of them. And it's very similar to Shark Tank. We have it at various universities throughout New Jersey. And due to the pandemic, we're going virtual. And in addition to that, I keep busy being on the board of a few tech startups, advisor on a few university boards, being a guest speaker. And I'm also active, as I said earlier, with Jumpstart New Jersey Angel Network. So that's a little bit about my background. Thank you.
And perfect, because that really sets the stage here. You look at Gina's experience where she's worked globally and bringing that in, and you've been operating in a virtual platform, helping companies, get accelerated and get the support that they need. So let's dive right in, because the big question on everybody's mind is, it's 2020, pandemic, we know this, it's been around for a few months now, more than a few. People are thinking that a lot of industries are starting to collapse or going to collapse by the end of the year. What do you think is the situation going to be for venture capital? And we're not going to hold you to the answers, but what's your perspective? What do you think?
Gina, you want to go first?
Sure, I'll go first. So I think the venture capitalists and all investors know and have been through the cyclical economic the cycles, right? So we know that there's the cyclical nature and there's recessions usually about every 8 to 10 years. Not that we were planning for this dramatic and drastic black swan that we call COVID, but I think that there are lessons to be learned from these other recessions. And I think the investors are well positioned to have learned them. So I think one of the things is the axiom that I think I also lived by when I was an entrepreneur is cash is king. And the downturn, so all the investors that had cash on the sidelines, they were kind of anticipating that there would be a recession and they're going to do fine. But there'll be others that don't. So I think it's just like most of the other businesses there, where the ones that really planned for maybe the worst case scenario or a rainy day are in better shape.
Mario, what do you think?
Well, you know, it's interesting. I've been through quite a bit of ups and downs. And Gina has just mentioned that, you know, remember in the 70s, there was a downturn. The 80s, there was a downturn. 2000, there was a downturn. 2008, there was a downturn. And we're talking about economic downturns. And now this one, which is really much different. And so I'm basically optimistic that we're going to come out of it. I'm not sure it'll be, we'll come out of it smarter. And then the other thing I looked at a couple of days ago, I looked at the various industries that maybe I'm jumping the gun here. So let me end it right there. I'm optimistic. We've been through this before, maybe not as crazy as this, and we'll come out of it probably a better culture and society and investors.
So you've spoken like seasoned investors. So kind of cues up, you know, the next question nicely. How do you think COVID has changed, you know, investing as a whole? What's happening that's different?
Can I, I'll take that one.
No, take that one, Mario.
So it's interesting. I tabulated what I call growth industries versus neutral industries. And when I say neutral, it's not something that would probably be investable right now. And I'm looking at my list right now, and I see a lot more growth industries at this point. And keep in mind, most investors, angel investors, are not looking at their 10% return or 15% return. We're looking more at 5, 10 times our return. And in order to get that, we have to look out 3 to 5 years. So when you start looking 3 to 5 years, you find out that, yes, this world right now is crazy. It's a tragedy. But you know what? In 3 to 5 years, we're still going to have some industries, and there's still going to be industries that I would invest in now that'll give us a return in 3 to 5 years. So I'm, again, optimistic on the investor side.
How about you, Gina? Seen any changes in investing?
So I think one of the things, the silver lining, if you would, is that typically downturns ignite innovation. It brings about innovation. And this is really a drastic situation. So I think there'll be more innovations in certain industries. I think, Mario, that not all industries will survive, but that's typical even during good times. This will really kind of separate who is really a growth company. So just a few examples that I came up with, if you look back in 2008, 2009, during the other recession, is that there were companies such as Slack, Venmo, Instagram, Uber, Pinterest. I mean, just the names go on, that back then it was unheard of that, you know, we would actually even be on Zoom right now. So I think that innovation will be ignited, and we will see opportunities in certain industries. I see remote communications, obviously, cybersecurity, delivery logistics, just to name a couple, education software. there's plenty of industries that are going to come out quite well in this. And I think those are the types of things that investors are looking for, especially since we do have a longer term view, as Mario pointed out.
Right. And now, with both of you being seasoned investors, do you see anything that's really, changed to your surprise over the history and course of your, investment paths? Which changes have surprised you the most? What's really changed?
Well, so over the past 10 years, and keep in mind, I focus primarily in the East Coast. And what the changes that I've seen over a decade is that I think angel investors have become more reliant on a pitch deck, if you would, a much shorter version of a business plan. Okay. And what I've seen even more recently because of the pandemic, obviously we've turned into more virtual meetings. We rely more on the cloud for some of the due diligence documents. Typically I enjoy having face-to-face meetings, whether it's just a casual meeting or mentor or a part of a due diligence or getting to know the company. But investment goes on. So what I'm seeing is that I'm making investment decisions based on virtual meetings. And again, I look at the documentation, which is the same, whether it's going to be virtual or in person. I enjoy the in person a lot more, but I'm still investing. So I look at it, and this is a new way of investing, is on a virtual non-contact basis.
And that's what our entrepreneurs are going to be very excited about that are in the audience and listening, that investments are still being made. How about you, Gina? What would you like to add to that?
Yeah, no, I echo Mario's comments. In fact, I think the adaptation by investors and investors embrace this new virtual reality. I don't know if all of them were that keen on it. I remember a few, Mario, that weren't really sure that this was going to be a good platform.
You're not pointing to me, are you?
No, I would never do that.
I saw no fingers.
I think you had to adapt.
That the level of cooperation also has increased. We are seeing syndicated deals. We're working with other angel groups. As I mentioned, I'm also a member of Golden Seeds, which is a nationwide organization. We have chapters all over the United States. And I've seen an increased cooperation and collaboration, which in the investment community, I think sometimes, there wasn't as much as that. So I think there's more opportunity for syndication, actually.
And that's great to hear. And now kind of switching the perspective to that of the entrepreneurs, how have they adjusted their approach to seeking funds? Have they just kind of withdrawn altogether and given up, or how are they adapting?
I'll try that one again. So it's interesting. I've talked to a few entrepreneurs over the past few weeks, and a lot of them have withdrawn, if you would. Their expectation for raising capital has not been as high as I was hoping for. And what I usually tell them is to say, look, now's the time to retrench, perhaps, rethink, pivot a little bit, adapt, I should say. But don't give up looking to raise capital. And in fact, now is the time to perhaps rethink your business plan, but go out there and still pitch some of your ideas, try to get as much Zoom calls that you can, send out the executive summaries, talk to your accountant, your attorney, and get out there. Now, obviously, if you're in an industry that's totally shut down, then there's not much you can do. Now, if you're in an industry, perhaps, that you could see the light of day in 3 months, 4 months, 5 months, well, now's the time to sort of bootstrap and try to get you over the difficult time, which is the next 3 to 4 months. And when I say 3 to 4 months, we may be able to see the light in 3 to 4 months. But I think this is going to go on for a good 9, 12 months before we start really getting out of it.
Possibly. Anything you want to add to that?
Yeah, I think just we spoken to some of our portfolio companies, and just one of the recommendations that we made is, you can never over communicate. Be candid, be proactive, stay in touch with investors, network as much as you can. A lot of these investors were a little shell shocked. I mean, I think we've been in this, boom economy for so long that they're not really sure what to do. So I think it's a question of just, being self-aware and going back and some of the things Mario touched upon: retrenching, bootstrapping, looking at your strategy, cost reduction. You have to be more efficient.
And we're about at the halfway point on timing, but we're not quite through halfway in the questions yet. So we're going to try to move things a little bit along here. When we look at, Gina, you mentioned some of the industries, ed tech, all of the education, the cybersecurity, these sorts of things that people are, well, investors specifically are interested in, because of course they're going to have an impact as we go forward and for however how long, this ambiguity that we're going to live in is. Any other changes that you've seen as far as the deals and the appetite that the investors have?
Well, there's a shift, obviously, in valuation. I think that's something that entrepreneurs need to be a little flexible on and to think about, and not to see it as a reflection of themselves, but just as a reflection of what's happening in the market. A lot of investors are also in the stock market, and it's not doing so well. So you have to think about the fact that, people are looking at that valuation and they're comparing. That being said, this isn't an asset class. It's still risky. But if you have value, the valuation will be fair.
Mario, have you shifted in any of the types of deals that you're going after, or you're still, going steady state? You know what you know?
No, I've so number one, the first thing I did, or one of the things I've done, is go back to my existing investments and find out how well they're doing, how their finances. And again, my advice to them is it's probably a bad time to raise capital. So first recommendation is bootstrap, right? Just become very, very efficient. And then if they need capital, then we go back to existing investors and try to, raise more capital to get them through this period. Otherwise, I just say, hopefully you have 12 to 18 months of funding. And if you don't, then cut back, become more efficient, bootstrap, it will be over.
And so those are great tips on that. But I know some of the feedback that we were getting that was kind of the impetus behind this live podcast, live event, was entrepreneurs want to know, what are investors looking for when they're when the founders are pitching virtually? Are you looking for anything different than if you would be in person? Can you give some tips?
So I think one of the things is, there's going to be some kind of glitch, or something's going to happen with your technology. Take that in stride. We've all been through it. So I think you need to prepare. You just need to be prepared for that possibilities. You need to acknowledge a little the issue that you might have. And it is hard to engage an audience. I mean, even if you're in person, you're not going to reach everyone. So don't be so hard on yourself. I think you just need to be efficient. I mean, we're on Zoom. There's Zoom fatigue. So, we need to know exactly what problem you're solving, what your solution is, why are you better than the competitors, your market size, how are you going to accomplish your goals? Be ready for those questions, and just be as authentic and clear as you can.
Mario, any tips on yours?
I think what Gina just said, I agree with it, and things really haven't changed from what an investor is looking for. So the same aspects of a pitch deck that we were looking at 6 months from now, 3 months ago, is the same as what we're looking for right now. Gina mentioned them, and it's just a little bit more difficult on the face-to-face. But again, with things like Zoom, you can get the facial expressions, you can get the body language. So and there's investors that just don't like this virtual aspect. And I'm not sure that's going to change for those individuals, but most investors are very much open to a virtual discussion and presentation.
Now, without naming names, and so we got to get some dirt here, can you give us some examples of what not to do when you're pitching? Surely you've seen some bad ones.
I'll take this one, Gina.
Mario.
You were chomping at the bit to go there. Go ahead, Mario.
There's a lot of things. So when somebody pitches, and they're what comes out of their presentation, right? So as investors, we can't get into every details in 10 minutes or 20 minutes. Okay, so it's really more of a perception. So if someone comes across and says, "I have no competition," there is no competition. I'm the only one out there. That's not going to cut it. There's no such thing as no competition. If anything, most of your competition is what I refer to as business as usual, right? People don't like change, so they like doing things the same way, even though it may not be as efficient, but they like it that way. They understand it, know it. So business as usual is one of the biggest competitions. Unrealistic revenue projections. Next year, I just saw a business, a presentation where all of a sudden in 2021, they're going to be doing $5 million. So that's not realistic. And then the other thing is you've got to know your market, right? So if I know your market or your industry, maybe not the industry, but if I know the market better than you do, then there's something wrong there. So those are like the three things that I would give advice to try to overcome.
But Eugene, anything different?
Well, not different. I totally agree with Mario, but just as an addition, I think a lot of entrepreneurs come into the pitch and they think, okay, I'm going to get funded. I got the pitch.
They do. That surprises me. I would think come in going, there's no hope, but I'm going to give it a shot.
I got the pitch. I'm going to get funded immediately. And I think they shouldn't think that way. They should think that the pitch is to get you to the due diligence. So you really need to make it crisp and succinct and be clear, and all those things that Mario said. Make sure you cover your competition. Make sure you understand the macroeconomic environment. If somebody comes in and ignores what's going on right now, and their forecast is something that was from 3 months ago, we know that's not going to happen. So I think you just need to be realistic and realize that you're forecasting now. And even if it might not be quite right, just give us your thought process and why you think that way, instead of just saying, no, well, it just is that way. And, you should give me the money. So you need to have reasons to invest. We're looking for reasons not to invest. Give me reasons to invest.
Okay. And if I may, Loralyn, can I give two examples without mentioning companies? So one company who I've known, I have not invested, but he was in the, I'll call it the ride sharing business. Well, right now it's not doing too well. So what he pivoted to is into the delivery business. And he's doing gangbusters. He's doing very good. And yet there was another company that we looked at. We were seriously considering investing. And we said, look, what's the impact of the COVID situation? And the reaction was, no, it's okay. Same numbers, not a problem. And we'd go back 2 or 3 times, right, Gina? And some of the response was the same. No, it's fine. I'm going to make my numbers. And what we're looking for is her ability to adapt and pivot and adjust for the current crisis.
And in fact, just on that concept of adaptability, a few months ago, Forbes had said that creativity was the most important soft skill that young people this generation needed to have. And they've recently shifted it to resilience, to be able to adapt to the changes and to make do. So it's interesting, even in a few months, they've changed their perspective on what needs to be done. Now, venture capitalists are not known for being sort of the most open and easy to access, group of people. So a lot of our listeners want to know, especially in this virtual world, what's the best way to reach out to an investor? So people are starting to think about, I'm ready to fundraise, I'm a founder, I'm going to need some money at, X number of months down the road. What do? Do they just, pick up a phone call, jump on LinkedIn and say, hey, I've got an idea, can I pitch you? What do they do?
Jumping on LinkedIn and trying to pitch me if I don't know you is not a good idea. So I think the best way is to really surround yourself with your advisors. So the accountants, the attorneys, your service providers, mentors, other advisors, they're going to introduce you. It's much better to get a warm introduction. It might not be a hot introduction, but a warm introduction or a referral. That's the best way to get our attention. That being said, there are ways I think you can reach out to different people and try to help them, have them help you link in with somebody else, you know, somebody that knows somebody. So it's always better to have a referral, because a lot of stuff just gets lost in the shuffle. And so I think a lot of the times the entrepreneurs don't research enough the investors that they're trying to reach. I think of it as the flip side of product market fit is investor entrepreneur fit, because if an investor has investor criteria, we have that criteria on our Jumpstart website, we have that criteria on our Golden Seeds website, and you really should take a look and do your research and understand what investors are looking for. I mean, if you're working in fintech and the investor you're trying to pitch does everything in consumer goods, that's not a good fit. So, you know, that's important.
Mario, any comments there about as far as how to be accessible?
Yes. So first thing I want to point out is I'm finding that there's a lot of people out there that, or entrepreneurs, if you would, that don't really read certain things, instructions. So even with Tech Launch, we say, okay, if you meet these qualifications, then we want to hear from you. Okay. Well, we hear from them anyway. So when we realize that they're not paying attention or don't read, if you would, then it's sort of a turnoff. But that being said, what I look for as an investor, my time is limited. So is the entrepreneur's time. So I don't want to waste anyone's time. The best way to get to me is what Gina just mentioned, is some kind of a warm introduction or a referral, whether from a service provider or another investor. That goes on top of my list. And then also, I'd like to see a one-page executive summary. And if you can capture my interest in that one-page executive summary, and I even have a template, then what will happen is I'll reach out. You don't have to force me. So the main thing is, you know, and like Gina said, get to know what my needs are or what I'm looking for or what I invest in. And by the way, what my investment industry needs are different today than they were 5 years ago or 10 years ago. So get to know what they are now.
The other thing, just to add on, I mean, we also do, Golden Seeds does office hours where anyone can apply, which is an informational session, and we're happy to help mentor. And even if you don't fit the Golden Seeds criteria, we can lead you in a direction that might be more appropriate for the size and stage of your business right now. And I think those kind of, we're doing virtual, so that was an event in person, we've changed to virtual. So there are those types of events where you can get mentors. I think Mario's doing the same thing, if I'm not mistaken, with Tech Launch. Mm-hmm. So there's ways to meet people without saying, okay, I'm looking for money. So I think take a look at that and try to slowly network your way in instead of, you know, forcing your way through the front door.
And that's one of the things that impressed me last year when I met you, Gina, through like Propelify, that you talked about that with Golden Seeds. Like, hey, come on and, you know, have a listen. And then Mario, of course, you've been doing your bullpen, you know, launches for, I guess, a couple of years now, more than that even. Mm-hmm. And it's the opportunity to just go there, listen. I think it's also great, you know, to come in and to listen to what other people are doing so you can learn from them rather than making the same mistakes. You have any comments on that? Do you think that's a way that?
Yeah. So one of the reasons we're doing the bullpen events is exactly for what you just said, is to really show other people or other potential entrepreneurs or startups on what it looks like and what kind of feedback investors give and even what the audience gives. So we do that intentionally. Now, the thing I do want to stress is that when an entrepreneur goes to make a presentation, they've got to look at it also as a learning experience. So besides walking away with a written check, which never happens, at least you'll walk away with some knowledge, some experience, you know, helping you tweak your presentation or, you know, some market feedback that you get. But the main thing is listen, observe, and learn some of your from what other people's mistakes can be.
Now, I like to ask this question of investors like yourselves who've had a long history of investing. If I gave you a magic wand and said, Gina, Mario, you get to change anything you want about the field of investing, what would you change?
Okay, so I wish I didn't need a magic wand to change this, but I would take away the unconscious bias. We need to level the playing field. Mario just went, because because it's a fact, right? It's prevalent, it exists. Investors invest in kind of who looks like them. There's a lot of studies that suggest that investors invest in women for performance. You have to prove yourself first, and men with potential. I mean, if you just look at the statistics, women-owned businesses only receive about 2% of investment from venture capitals. Horrifying. Even gender diverse teams only receive about 10%. So 88% went to the all-male teams. And I just think that we're missing out. There's a lot of innovation out there and a lot of ideas out there. And maybe it's just my, cultural experience and background in different cultures and with different people that leads me to, kind of think about this more than the average investor. But I think we do need more angels, more VCs in the ecosystem that are investors, because then that will drive entrepreneurs getting funding that normally would not. So I wish I didn't need a magic wand, but that's what I would do.
Amen to that. Mario?
That's interesting. Gina, I can't beat that one.
No. I set the bar there, Mario. Yeah.
I just can't beat it. And I've been asked this question before, and I refer more to it as, do I have any regrets? And the answer is no, except I would like to take more risk. I wish I would have taken more risks. But the reality is that putting aside the biases and the diversity issues, and Gina, you said it perfectly. Thank you. I've just, I've looked at it, I've thought about it, and I got to say, I've been blessed. I've been challenged with various things, both personally and business. I've been given opportunities, and I've been lucky, really lucky. And frankly, the diversity issue, the bias issue, that's not the way I think. But it's very much out there. It's prevalent, and it's got to change. And we have to change. It's not so much it's we have to change. Gina, I totally agree with you.
Well, sorry, I talked over you there, Gina. And Mario, you kind of answered the next question where you said you wish that if you could go back in your life, you would have taken more risks. So I'm going to ask Gina the same question. Now, again, seasoned people, we're all, we've been around more than 10 or 15 years or so. So what would you change if you had one do-over in your life? What would you do differently?
I thought about this, and I decided I had no regrets. I only have wisdom. So I don't think I would change anything, because I think about it as a learning experience, because you have to find that balance. So even with your family, being an entrepreneur and starting 3 businesses, and just general life experiences, even investing, you're going to have things that don't go well. You're going to have companies that fail, companies that do well. Luckily, I've had some that did really well. So I don't think you can change the past to make things different. I think what I would say is that you need to change now to make things different for the future. So that's what I'm working on.
Mario, anything you'd like to add or talk a little bit more in depth about what you'd want to change?
I've been blessed, I've been lucky, and not sure I would change much, except I wish I would have taken more risks.
Okay, well, in our last question here, as we're wrapping up, today's podcast on having this wonderful chat with these investors, I'd like you to both have the opportunity to take the platform and communicate whatever message it is that you want to send out there, either to the other investors who are listening to this or the other founders and entrepreneurs who are potentially seeking fundraising or might be some point down the future, but maybe they're a little intimidated. What's the message you want to leave our audience with?
Should I take that one first? So it's interesting, and I've thought about this as well, and I've been asked similar question. And the bottom line is that you've got to be good at what you're doing or what you're trying to do, okay? But in general, whether you're an investor or you're an entrepreneur or you're a seasoned CEO, my real suggestion, parting shot, if you would, is to make sure that you surround yourself with people that are smarter than you are. And if you feel that you're the smartest one in the bunch, you ain't. So the best thing to do is surround yourself with people that are much smarter than you. One of the reasons I invest with Jumpstart is because I'm overpopulated with smart people. Look at Gina.
Yeah.
I mean, it's just, it's wonderful. So surround yourself with people that are smarter than you. And I'll give you another one, and that is be realistic with anything you do in your work, in your life. Be realistic with optimism.
So I thought about this too, and I agree with everything that Mario said, that you definitely need to surround yourself with smarter people. And I feel the same about Mario, so we're all in good company. So I think you need to do something you're passionate about. So that could be a startup, that could be volunteering, that could be CEO, that could be an investor, but you really need to be passionate about what you're doing. And I believe that everyone has, and I'll call it a superpower, something they're really, really good at. And it drives them to be kind of the best of themselves. And so if you can assemble all of those superpowers into a company, you're going to be unbeatable. So I think you should find your power and then figure out what else you need and then use it for good.
Well, thank you. Now we've got some questions coming in from the audience. So you guys aren't off the hook yet. I know you were hoping, but as everybody's got, Zoom backside, they're thinking, oh, let it be over, but not yet. We've got a question and they want to know what's the best way for them to demonstrate product fit? Other, of course, then here's the hockey stick, because that's what everybody sees. Any advice?
So I can take that. I'm sure Mario probably has similar advice. So one of the things that we look for is, do you have a customer? Do you have customers? Have you spoken to customers? A lot of the times, people be so enamored by their technology and they just think it's the greatest thing. And we find that there's not a lot of research behind that. So unless you've gone out and talked to at least 100 customers or potential customers, it's hard to find product market fit, because usually what happens is after you start talking to people, what you thought people would buy or what you thought was something that was solving a problem actually doesn't, but you'll get that feedback and you can work that into your final product. So I think we need to see some proof of that, where you have a pilot, you have people you spoke to, you have research.
Totally agree. Just to add a little bit more, I refer to what Gina just mentioned as traction, whether it's downloads, eyeballs, financial revenue, but you need to demonstrate that someone else other than yourself believes in the technology or the product, and somebody's also willing to pay for it. So one of the things we look for is the traction, which is very important.
Are there any other questions from the audience? Here's your opportunity. We've got two great investors, seasoned, and who are graciously giving their time to give all the rest of us advice. Any other questions coming in? This is where we have that awkward silence. We'll just work with it.
We can fill in.
Yeah,
no,
we can talk forever, right, Mario?
Well, I think that the audience is fairly quiet. So I think what we're going to do is, and again, if we were in person, of course, there would be, loud applause right now. So we'll just have to, kind of make do and pretend. But I really wanted to give a shout out to both you, Gina Tedesco, Mario Casabona, for taking your time here today, talking to us about what's changed in investment and how founders should be optimistic about it, that there are still monies available. They've just got to do what they've got to do, to get it right and to get in front of you all. So a big thanks to you both, as well as to Medina and Kelly Outing over at Equal Space and folks over at Grit Daily. Thanks, everyone.